It has finally happened. HIMS is now over 134% year to date. I did a video on January 1st or even an X post saying HIMS could easily double in 2025. And I don't make those posts very often. I'm not trying to get views, trying to get attention, unless I truly believe in the company and I don't like to ruin my reputation for anything. But it did finally happen. And I'm not doing this video to get a victory lap. I'm doing it because a lot of you guys asked me to do it. And I'm seeing a lot of people making the same mistake they made with other stocks, or a mistake that I personally made. And I learned this mistake, and that's why I have not sold a single share of the company. And if you did make this mistake, I think you're gonna learn something very valuable today that I'm gonna talk about, so you don't repeat this mistake again. But this is not just for current shareholders, it's also for a lot of the shareholders that want to be, owners of HIMS and HERS Health. And everyone is just looking at the stock price. Everyone, all they care about is the chart. They get upset when stock go down on earnings. They get excited when the stock goes up on earnings. No one looks at the earnings themselves. No one looks at the fundamentals. And this is why a lot of you guys, you get upset on your stocks, or you sell them too early. You sell the stock because it went up, or you don't buy it because it's trading at 52 weeks high. All that stuff is dumb. You should not care about the stock price. All you should care about is the fundamentals relative to the stock price, because the stock price over the long term is correlated to the fundamentals. So many times you have companies, they go up 200%, but if earnings per share went up 400%, the stock is cheaper now than when it was before, but a lot of you guys would skip it just because it went up to 100%. So this is why investing is not easy, because you have to focus on the fundamentals, you have to focus on the valuations, and not much on something that's so easy to track, such as stock prices. And this is what I posted on X. I said, for whoever is taking profits on HIMS here, Palantir is trading right now at 70 times sales. Insane. Duolingo is trading at 19 times sales. This is some app where people learn a new language. This is how crazy this market is. It's trading at 19 times sales. HIMS is growing much faster than those two companies, better long-term prospects, much faster growth, much better potential in terms of a margin expansion. It's still only trading at 4.9 times sales. SoFi right now is trading at 5.2 or 5.3. So HIMS is barely catching up to where SoFi is. It's not even at 10 times sales to start considering the stock expensive. If HIMS goes to 10 times sales, it would be $100 per share. Yet a lot of people are skipping it now, or they're selling it just because they look at the stock price and they see the stock going up. And this is one of the biggest mistakes you could make as an investor, is not focusing on the fundamentals, you change those fundamentals and focusing on the stock price. But it would be a very bad idea, in my opinion. Again, not financial advice, but it would be a very bad idea for most people to sell HIMS here after they saw traffic spike 650% after the Super Bowl ad, which was extremely successful. And if you look at the credit card data, that was in January alone, the web traffic for HIMS is up 10% month over month. For HERS, it's 23% month over month. The HERS web traffic alone is 150% year on year. Total credit card sales up 85% year on year. Google Trends for HIMS weight is up 1900%. HERS is up 1300%. And that was in January, way before the Super Bowl. So imagine how those numbers are looking right now in February after the Super Bowl. Yet if you compare it to the analyst estimates, the analysts have yet to revise the revenue and earnings growth upward for the company. So HIMS right now is trading at 4.9 times forward sales, but this is still a 42% increase, which was before the Super Bowl ad and before everything else. In my opinion, with the Super Bowl ad and everything else, revenue growth would be around 60%, 65%, which means HIMS right now is not even trading at 5 times sales, maybe it's 3.5 or 4 times. So this is how cheap the stock is, especially if you compare it to the market. And the clueless analysts, they're still expecting only 13% revenue growth in 2026. And it's laughable, it's funny. But again, they're always late. That's why, the stock is going up so much and a lot of people are getting exposure. But even after HIMS is up so much, it's still only trading at 49 times earnings. 49 times earnings might seem expensive, but not for a company that grew earnings 287% in 2024. And the clueless analysts, they're expecting only 12% growth in 2025. Again, to me, I'm laughing because it's laughable. And imagine selling HIMS despite all those metrics just because the stock went up. You could do that if you want, But to me, I'm fine. If the stock goes down 20, 30, 40, 50%, I couldn't care less. I'm fine. I would buy more and I would hold the company because I'm in it as an owner of this business for the long term. I don't own just the chart or the price. I own a piece of the company that's HIMS and Hers Health. And the biggest fear for most investors is the short squeeze, that this is just a short squeeze because of as of January 31st, you had around 33% short interest. And maybe that's just a short squeeze that's going to end up like GME and AMC. And this could not be further from the truth. Many companies like Palantir and others, they had very high short interest. They ran up on a short squeeze, and this short squeeze was permanent. They kept on going up and up and up and up. Because sometimes if the company is actually good, like Palantir and other companies, on a short squeeze, the stock gets a lot of attention and it gets discovered. Now HIMS is getting discovered not just by consumers through the Super Bowl ad, but also by institutional investors that have seen those ads or are seeing the stock price and are starting to look at what is HIMS and Hers Health. The same way when Nancy Pelosi bought Tempest.ai, Tempest.ai was no one knew about the company. It got discovered, and now the stock is going up as institutional investors are buying it to get exposure. So now HIMS and Hers Health is starting to get discovered. It's starting, to look much, much better. So maybe those shorts they are covering are not going to be long-term investors of HIMS, but they are being replaced by long-term investors that have recently discovered the company and they want to own a piece of telehealth and healthcare tech for the very long term in their own portfolios. So I'm not saying the stock can't go down on earnings. It did go down 20, 30% before. It has happened many times. But all I'm saying is that there's a very high likelihood that this short squeeze rally, you could maybe call it short squeeze, is more permanent than most people actually believe. And this is what I said about HIMS, that the HIMS rally is only getting started. That was at $36. Again, people said I'm hyping things up, which I wasn't. I was just saying the truth. As I say, I'm not selling a single share before the company becomes so mature that it starts paying dividends. And the company is nowhere close to being mature. They still have 10, 15, 20 years ahead of them before it reaches peak growth and before it reaches maturity. So again, I think it would be a very big mistake for me to be selling HIMS. And I think it would be a very big mistake for people that want to get into HIMS. I'm not saying go FOMO into the stock, but when you decide to enter the stock, you're going to keep waiting for it to go lower because it was still up 100% or it's still up 50%. You shouldn't focus on that. You should focus at the fundamentals. Look at the P ratio, look at price to earnings growth, look at everything, do your model, and come up with a fair valuation on the company. And for me personally, I told you guys before that HIMS is still a 10x from here. And that was from $36. So now it's like a 7 or 8x by 2033 if they get a 10% market share. So I still like the stock very much. I don't care if it goes lower. I'm riding it on the way up. I'm riding it on the way down from $7 per share to now around $59 per share. It's been an amazing rally. And I did find a stock I call HIMS 2.0. I shared it in my own group. If you're interested, this is the link. So thank you very much for watching. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.